Hi, time once again for Money TV. I'm Don Baillargeon. So glad you could join us. Money TV is the program all about money and what makes it happen. Well, stock markets all over the world have been through a period of volatility during the last week, even setting a swing record on the Dow Monday when the index opened down 1,000 points, recovered most of it during intraday trading, but still finished off almost 600 points lower. Now, after an extended bull run, this may have been the correction that many analysts warned was coming. After sell-offs in China, Australia, and Japan, U.S. markets followed suit, then joined by exchanges in Europe. In London, for example, almost 74 billion pounds of value was wiped off the Financial Times Stock Exchange 100. China, they took the biggest hit, losing 8.5% in its worst sell-off in about 8 years. Now, brokerage houses and financial analysts were quick to point out that while the losses were certainly of great concern, the sky was not falling and corrections can and do happen. In fact, we've seen it all before, and we will see it happen again. In less than 20 years, we have witnessed Black Monday in 1987, Black Wednesday in 1992, the dot-com bubble bursting in 2000, and of course the collapse of the stock market in the wake of the 9/11 tragedy. The media hasn't anointed a creative name for this latest event, so we don't have an August Armageddon or Summer Slam, at least not yet. Political candidates seeking news airtime spent a great deal of time pointing fingers at each other on Tuesday, but let's be frank, only their individual minions are really going to listen to that. The Federal Reserve is going to have to further analyze what happened before proceeding with an expected interest rate hike next month. Economists at Barclays have already pushed their rate hike forecast to March of next year. But the underlying issue, or the elephant in the room, so to speak, has been the flow of central bank stimulus money and the feeling that inexpensive money is the secret to economic stability. The quantitative easing over the last 6 years, which has swelled stock prices, has also swelled the Fed's balance sheet. That is now at $4.5 trillion, or right around 20% of our national debt. The Fed has been trying to solve the debt crisis by creating more debt. Now, that wouldn't work in a middle-class household. Why policymakers think it would work in a national economy is anyone's guess. Now, here's something you don't have to guess at. It's our toll-free number, good from anywhere in the world you're watching the program, 888-259-4449, to get free information about our featured guests. When you do call, be sure and ask to be added to the subscription list of our Money TV newsletter. That is also free. Again, toll-free from anywhere in the world, 888-259-4449. On your mobile phone, just text Money TV to go 800 or 46800. Visit us at moneytv.net. Please like us on Facebook and follow us on Twitter.